Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the October 14th, terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should not be prisoners of our past, but instead pioneers of our future. So let's do everything we can today to be pioneers of our future. Of course, one of the best ways that we can do that is to always remember that he who forgives ends the quarrel. And there's been a quarrel between the Bulls and the Bears. We're going to see if the Bulls are going to forgive today. And if they forgive, will the Bears move out of the way? I'd love to hear from you. That means give me a call at 877-927-6648. Internationally, you can call me at 727-445-1044. That way, together, you and I, we can go on a safari out there. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. You know, I have overlooked something really important. It wasn't until I heard this morning's open when I heard that voice from Don from Odessa, and his grandson is undergoing some cancer treatment out here. He won the first battle. Second battle that he's got to deal with here is some bone marrow transplants out there. So how about you and I, all of us Tigers, let's send out all the white light that we can to Don's son out there, grandson, I should say. And, the easy way to do that is anything that you see white today, just track that into your body and spit it right out to Don in Odessa. I know that he would love that. Let's go take a look at these markets. Let's go see if we can find some white light out here right now. Dow futures are up 71 points. They're trading out at 16,302. S&P futures up 11 points, trading at 1877. NASDAQ up 26 points, trading out at 38.25 out here. King dollar up about 12 pennies, trading out at 85.86. Silver up 50. How about up $50? How about up $5.70? She's trading out at 12.35. Silver up 15 pennies, trading at 17.50. Light sweet crude back 78 cents or so, down at 84.93. Let's take a quick peek across the globe, see what we have going on out here over in Germany right now. The DAX, as soon as I can get my eyes on it, where is that DAX? There we go. It's down. It's flat. It's off $4 right now, trading out at 88.08. The FTSE is basically flat as well. It's up $7, trading at 63.73. A sea of red in Asia last night, meaning if we take a look at the Nikkei, the Hang Seng, and the Shanghai, it was the Nikkei that was down the most, off 364 points. Let's go see what it was doing. Down 2% out here. If we take a look at the Nikkei, the Nikkei's been trading with inside a 2,200-point consolidation range out there. It's a doozy, that's for sure. What the Nikkei was able to do last night was to close back inside its August 8th swing point. Now, our markets, we take a look at August 7th. Inside the Nikkei, it was the August 8th swing point. That would suggest that going down and testing the low of that area, 14,753, would not be out of the question. We can see in the Nikkei that if you take a look at this 14-period relative strength indicator out there, that is down at the very oversold reading, down at 28.99. Last time that we were down in that area, the Nikkei was down at the bottom of its consolidation range, which is right in the 14,000, 050, 037, somewhere right around in that area out there. So Nikkei actually a bit stronger than last time that there was any kind of major selling with inside of that index out there. Let's go take a look at our futures markets. Let's go see what they're doing out here. Let's go take a look at each of the four. Let's start off by looking at the S&P futures. What do we know about the S&P futures? S&P futures right now trading below the August 8th swing point out there. That low is 1862.75. They've made a 100% move if there's going to be a continued move lower inside of the S&P futures. All we want to do is take a look at the expansion of our last set of swing points. That's the low on August the 8th, as well as the high on September 19th. The 1.272 level, 1846. So if we don't see a reversal of fortune today, you can expect 1847-ish to be on your target out there. If that level fails, then it's going to be the 1.618 expansion. 1801 is that number, and 1801 will go ahead and bring the lows from April. The actual April 14th swing point low is 1790 out there. Those are the areas to be watching inside of the ES Mini. Let's go take a look at the NASDAQ out here. NASDAQ right now trading out at 3827. NASDAQ is trading, has tested back inside the upper part of its range, I guess we can call it. It's inside the August 8th swing point. So yesterday we saw it close below that. 38.1975 was where it got down to. Closed out at 38.66, back above the 38.1975 mark. If, in fact, it can get above that, where will the NASDAQ run into resistance? Probably around 39.42, 39.07 or so. However, if it were actually to do that, get up there, you'd have a bullish engulfing candle down at a potential level of support, meaning that 100% move of a move. If we do take a look at possible retracements as well, just take a look at retracements from the high on September the 19th down to the low that was put in on yesterday afternoon as we were coming into the close. Your dead cat bounce 39.17, 39.94, your 0.618 retracement level. Those would be the areas to watch. That is on a bounce. What's the area to watch if, in fact, we continue to see the market cascade lower? Well, we do the same thing out here. Let's just take a look at our expansion of swing points. That expansion of swing points says the 1.272 level inside of the NQ would bring in the 37.38 area into play. That's on the daily chart for the NASDAQ. Let's go take a look at the Dow. The Dow being stronger at this stage versus the S&P versus the ES Mini. Not much, though. Because the Dow here yesterday cascaded, got down inside the August 8th swing point, has not tested the low. The low out there is at 16,143. Could it go test that? Absolutely. If it breaks through that level, there's A to B equals CD down patterns. We haven't taken a look at any of those. The clear pattern here on the Dow futures. Let's go take a look at that. Its A point is going to be September 19th. The B point is going to be October 2nd slow. The C point, that two-day retracement. We've seen a 1-to-1 A to B equals CD to the downside. Your 1 to 1.272 takes you to 16,142. 16,142 is going to take you all the way down to the August 8th swing point low, which is at 16,143 out there. So we'll see if that pattern comes into play. We'll deal with it if it breaks through that level. But at this stage, you've got everything is in place here for some kind of rally attempt. What else? Well, let's go take a look at the Russell 2000. Russell 2000 yesterday completed a 1.272 butterfly pattern. What's a butterfly pattern? I'm glad you asked. Butterfly pattern is where we take a look at expansions between swing points. That expansion is going to be the swing point low from May 15th inside the Russell. That's at 1078.70. So from that low to the high that came in on July the 1st out there, and that was at 1210.70. If you take the difference between those two, you multiply it times 1.272 and you subtract it from 1210.70. That's going to give you a price projection of 1042.80. What did the Russell 2000 do? Russell 2000 do yesterday? It got down to 1038.60. It completed that pattern. It also completed the 1 to 1.272 A to B equals CD to the downside. All butterflies, all Gartleys need A to B equals CD pattern. So we've got the completion of two patterns. Today at this stage of the game, you've got a bullish reversal signal. You've got a three-river morning star pattern. What do we need in order for that to take place? You probably need to see a close inside the Russell 2000 futures above the 1055 area. Of course, closing above the high from, or the open from October the 10th. That price is at 1061. That would cement that pattern out there. Of course, we have seen a couple of these bullish reversal signals here fail. However, you would have a confirmed have a confirmed butterfly pattern inside the Russell. Probably the Russell 2000. The one worth really noting out here because it has been the weakest. From weakness, you know how this works, folks. From weakness, we get strength out there. So we'll see how the day trades. If we go that's on the daily charts. We'll take a look at some intraday charts here. In fact, let's do that right now. Let's take a look at the NASDAQ out here, the intraday chart out here. The NASDAQ on the 120-minute time frame, the 2-hour chart out here. We got a number of different patterns that we can be observing and watching. If we take a look at coming off of the high here from 6 a.m., that was on October the 9th. If we take a look at from that high all the way down to the low that came in at 5:15 yesterday afternoon. Yes, I love that Who song, the 5:15. Well, as it was making that lower low out there, did a number of things. On the Rhodes momentum indicator signals, it made a lower low with less weakness out there, less relative weakness. That in alone is not a reversal signal. However, coming into the 8 p.m. time frame, we did get that reversal signal. You got a nice bull sash candle. You had follow through during the next session out there. We've got a 7th wave to the downside that says the trade is relatively easy. Your stop just needs to be 1 penny below 37.92.50 in order for this pattern here to have failed. Right now, what we're watching is we're watching price get into the unfair low, the old support. We'll see if it's going to be resistance out here, and that's right here in about the 38 to 30-ish type range. 38.48 is where you should expect the bounce to perhaps run into some trouble. If it doesn't run into trouble there, 38.76 would be the number. You get above 38.76. This is going to be more than your garden variety bounce out here. It's actually going to be a signal of a potential change in a trend. Yes, 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 Steve. Perseverance Rhodes. The market still, believe it or not, it's in the process of forming a bottom out there. This is Steve Rhodes. This is TFNN. Give us a call, folks, 877-927-6648. Again, let's send out some white light for Don in Odessa, Florida, for his grandson. We'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Is always better when we're together, folks. Dow up. Dow futures up 79 points right now. Let's go check in on the currency pairs. Let's go see what kind of patterns we can identify out here. Of course, we're going to go start with the Queen because of its impact on the King out here. We take a look at, this is a 30-minute chart that we're taking a look at here. Let me pull this back just a tad more. And we're going to take a look at the low that formed out here back on October the 3rd. And let's just take a look at different A to B equals CD patterns. Let's take a look at Gartley, butterfly patterns, anything that might exist out here. So if we start with the low coming in right around the 10:30, 11 o'clock time frame on October 3rd, that's going to be our A point. Our B point is up here. A little bit of a spike high into about the 3 p.m. session on October the 6th. That's your B point out here. Your C point down here on the about 6:37 a.m. on October the 7th. What we can see here is that the euro made its A to B equals CD to the upside. Extended beyond the 1-to-1. The 1-to-1 would have given you a price objective right around the 1.2767 level, the 1.272, about 1.2813. So we know we've got an A to B equals CD to the upside out here. Let's take a look at the A to B equals CD to the downside. What that created was an actual Gartley buy pattern. Let's go take a look at it. The A point on this pattern is going to start right up here on the trading session of about 3:30 or so in the morning, October the 9th. That's your A point. Your B point down here about 12 noon or so, October the 9th. Shallow retracement up here onto October the 9th as well. Your 1-to-1 A to B equals CD. It never made it all the way down there before it went ahead and reversed. That price projection would have been 1.2593 out here. All we saw was a low of about 1.2611. Pretty strong when that's all that she does out here. And now if we take a look at retracements as well, if we take a look at retracements coming off of that low back here on October the 3rd all the way to the high that was put in here on October the 9th, what you will see is that price stopped where? Right at the 0.618 retracement. So we've got a 0.618 Gartley buy pattern. Of course, you know there's 5 outcomes of the Gartley buy pattern. One of those outcomes is just simply a dead cat bounce, a 0.382 retracement. Well, we got more than that. If we take a look at the retracement inside of the market, you're going to see another Gartley pattern. You're going to see a Gartley sell pattern that it's set up here. Let's go take a look at it. Let's take a look at the A to B equals C to the upside. You're going to use as the low right down here around 2:30 on October 10th. That's your A point. Your B point out here right around about 8:30 in the evening. It looks like on October the 12th. Little retracement down into the October 13th, about 3:30 time frame. 1-to-1, 1-to-1.272 is really what it hit. Almost Johnny on the spot out there. That took place at about 4:30 to 5 o'clock in the afternoon on October 13th. If we take a look at retracements now, in this case here, from high to low, what we will see out here is we saw a retracement of what? 0.786. There was your 0.786 Gartley buy pattern. This was last night as the market was moving higher into the 4:30, 5 o'clock time frame out there. The U.S. dollar index, if you're watching, the U.S. dollar index was getting creamed. Why was it getting creamed? Because of this move here inside of the euro. Why did the euro pull back from then? Well, because it formed this nice little Gartley sell pattern out here. Remember, 5 outcomes of any Gartley pattern. Let's go take a look at those potential outcomes and see where we're at right now. course, I have to actually delete the what's on my screen. Come on, do this. Work with me, would you? Work with me. This is showbiz out here. Work with me. Okay, show tunes, right? Okay, let's go take a look at what we've got going on right now. So we know we had the Gartley sell last night. Let's go take a look and see what kind of retracement that we've done. We're going to come off of the low here between 2:30 and 3 o'clock on October 10th. And then we're going to come all the way up to that little spike high, that little completion of that Gartley sell out here. And then, what do we have? 8.786 retracement. I mean, Johnny on the spot. That number, 1.2644. The actual low that we saw so far, 1.2645. Folks, how does that work? So the move to the downside, there are, as I say, 5 outcomes. Outcome number 1 of any Gartley is a 0.382 retracement. No problem. Careened itself through that. Slice through the 0.618 level of the shorter term. It's a 30-minute chart out here. Like Kerrygold butter with a nice hot knife out there. Wide-ranging bar. Price stopped at the 0.786 level. We start to see some small bodies out here. This should be the extent of the move. There was an A to B equals CD as well to the downside out here. So what we have in place right now is a 0.786 Gartley buy. We got a little bullish reversal signal. That took place between 6 and 6:30 this morning out here. We'll see if this low holds. If it does, we ought to see the euro continue its move up to the upside and probably take out that swing point from about 4:30, 5 o'clock in the afternoon. Of course, if we do that, or if it does that, we will then begin to see some additional weakness inside the U.S. dollar index out there. This segment brought to you by no one other than H.M. Gartley. What a good guy. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call Call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow up 7 points. Trade out at 16,398. S&P is up 10, trading at 1885. Composite up 36, trade at 42.49. Russell 2000 up strong this morning, up about 10 points, trading out at 10.59 out there. Leading the charge, the upside, Netflix up about $10, up a little over 2%, trading out at 4.48. Tesla up over 2%, up $5. Skyworks Solutions out with numbers before the bell, up 9%, up $4. Hunt JB Transportation, JBHT up 6%. Google's up about 0.5%, up $3. Crown Castle International up 4%. You've got United Continental Holdings up 5% this morning. To the downside, Lakeland Industries. That's the entity that's been up just absolutely huge, off 20% out here. That is the hazmat company out there. What a volatile stock this one shall be. We've got Signet Jewelers down about 3%, off $3. Alpha Pro Tech down 27%. Ouch, that is a stinger. That's down about $2.80. Buckeye Partners off 2%, down $1.68. Sunoco Logistics off $1.40. You've got Magellan has lost its roadmap out there. Where did it just flipped off my screen? I love that Magellan stuff, but flipped off of my screen. Okay, the Dow's up 88 points right now. We'll see if the we'll see if the markets are able to hold today's gains after yesterday's big sell-off going into the close between 3:30, 3:40, 4 o'clock, something along those lines out there. Let's go take a look at a couple of things here that are moving and grooving. So, let's take a look at things moving to the upside here this morning. Let's go take a look at, where'd my cursor go? There we go. Let's go take a look at Netflix, NFLX. Let's go see what it is doing out here, what it has done. In the case of Netflix, has not been able to really bust out its B point. Let's see, the volume out here of a potential A to B equals CD to the downside was from September 22nd. 2.3 million shares were traded down there. Yesterday was a test of that area with about 2.8 million shares. Had the volume, couldn't bust through it. What was keeping it in place out here? Let's go look at the left-hand side of this chart out here. This has a couple of signs of strength out here. Let's see. One with 4 million shares. That was on June 17th. Another with 4 million shares on August 7th. So these are pretty strong signs of strength out here that have held Netflix in place out here. Netflix, though, trading below its market profile low. So that gives you in the puts you in the neutral to bearish camp out here. And getting above, closing above 449.97 would go a long way to get you back to the neutral bullish type stance. You getting above 463.07 would put you into the bull mode out here. Netflix on the way down really hasn't been too shabby out here. Let's put this on a weekly time frame, see if the weekly gives us any better view of what goes on with Netflix. When I say hasn't been too bad, meaning the volume on the way down on a daily chart has not been anything significant. Now, it's probably not a good idea for me to be changing from daily to weekly when I have all this data and all these charts here that are being populated, I can see that that has created a little problem. Let me switch back to the daily and cross my fingers and hope that I'll just switch over to a different set of charts out there. There we go. Stevie knows how to trick the system, so to speak. Let's go take a look at, although the data does not seem to be flowing. Oh, man. Good Lord. Nothing like a slight little problem out here when you've got 11 minutes to go in the segment. Okay, so come on. Why the heck? I have to just check out. Bear with me for a moment. Oh, yeah, no, that blackened things up. Okay, we didn't mean to do that, but I just wanted to check and see what else I've got going on here. Okay, that's not a problem. I know you guys can hear me. So, but the lack of a data feed is always a troubling thing. So, let's switch over here. Let's go take. It was kind of interesting to me, and I'll just wait for this to come back or find a way to reboot or something, but really odd. If we take a look at, I was just noticing as I was looking over to the one of my screens out here, I was noticing the continuous contract for bonds out here. And as we take a look at the patterns out here, if we notice that bonds, as they were making a low back here on the trading session in January, this is a weekly chart, by the way, that we're taking a look at. So it's a weekly continuous contract for the 30-year Treasury out here. And what I find interesting here is as it was making a low back in the weekend of January 3rd, to be specific. As it was making that low, it was doing it with less relative weakness out there, very similar to what we looked at on the 2-hour chart for the NASDAQ out here. The very next week, the weekend of January 10th, we saw a nice bullish reversal signal. That was your three-river Morningstar pattern, put in a nice bottom. What I noticed is that at this stage here, it looks like potentially the 30-year Treasury on a weekly basis has made that, is in that 7th wave count. That doesn't mean that it ends right here. It could make higher highs coming into next week out there, but it is at that count where one should be paying attention to it at this stage of the game. So I just throw that out there as I see absolutely nothing moving on my screen. Man, that is a real problem. I am going to try the old reboot thing out here, see if I can get that going. Otherwise, I'm just going to have to tell you stories or something like that. But that's okay. I'm pretty good at telling stories. But I'm going to try to reboot here just for a moment. I can always go to the newsletter and take a look at charts. So I can always use that as a fallback as well out there. Looks like they may have to do that. But let me give me 1 second here to try to reboot. I do have another data feed that I could go to as well. I'll check out one more thing out here. I still got you guys, so that's good. Let me do one more thing out here, just make sure that there's no internet issue. So that's weird. It's a e-signal issue, so we'll see if this comes back up on the screen. In the meantime, I'm going to go ahead and pull up my newsletter. That's going to be the easier way to do this. So you'll get a chance to see what's going on inside the newsletter. Recent master probabilities, master file. Okay, all right. While the system here really totally reboots. Let's go take a look. Let's go take a look at my. Let's go take a look at the newsletter. So let's take a look at the first page of the newsletter. Sorry to subscribers, but this is the only way I can. Typically I don't share the entire newsletter service with subscribers out or with during the radio show. But in any event, we're going to do that. Okay, so there's been a lot being made if you listen to the financial newsmakers in the markets about price being below the 200-day moving average, right? And let me see if I can expand this on my screen up here. I think I can. No, I don't know if I can. Oh, I can. Perfect. Okay. So you guys can see this on the... Oh, no, that was weird. I lost that. Okay, let me see if I try that one more time out here. So I did for subscribers... Okay. You're going to just have to see it in the smaller version. Oh, no, I can do this. I can talk about being able to zoom. Give me a moment. Zoom could make this maybe like about 200% or 150, 100. Let's try 175%. out there. Okay, hey, perfect. Look at that. Okay. Now, so you'll hear a ton being made, a ton of news being made here in the financial press about the fact that you've got price trading below the 200-day moving average. And what I pointed out to subscribers is, yeah, it absolutely is. Now, this is a weekly chart that you're looking at on the screen if you're following along at TigerTV. And so the chart that you're looking at in the upper right-hand side, it's a weekly chart for the S&P 500. If you watch closely on it, what you'll see is a little bit of a green line that takes us from the September 19th high down to the low of yesterday. And what's interesting about the markets is the markets have these natural harmonic patterns that are inside it. And the 200-day moving average is interesting, but the mere fact that price trades below it, if we take a look at coming off of the March 2009 lows, we saw price trade below it back in April of 2010. We saw that back in June, July of 2011. We saw it take place back in about the, I can't tell what this time frame is here. Looks like maybe June of 2012. So trading below the 200-day moving average. Now, on a weekly basis, what I'm using here, folks, is a 40 period, right? 40 times 5 equals 200. That way we're looking at the same thing. And it's the blue squiggly line, bluish, cyanish type of line that you are looking at on my screen out here. And so that's the 200 days. So the mere fact that it's trading below that does not mean that the sky has fallen, and that there's no possible chance for the market to reverse course out here. That is not the case. What's also interesting here, if you really take a look at the chart, and if we look at the retracement so far from high to low this month, and I go back, and what I've done here is I've gone ahead and I've put the natural harmonic of the retracement that we've seen so it matches exactly in price, and I pull that back to the left-hand side of the chart, and what you will see is you will see similar retracements where price moved inside the S&P, moved below the 200-day moving average. I wish my charting system was active here. I would be able to tell you exactly what was going on and when that was, but it looks like that was the June 2012 time frame. So from its high, which I've got to assume was before then, from its high, we saw price get below the 200 on its weekly basis out here. Again, the 40-week really on the weekly basis, and we saw a natural harmonic that was equal to that level. You can see here that since the bottom, we've seen 1, 2, 3, 4, with this period here being the fifth. If you go take a look at the October 2007 highs, actually, if you go back to the July 2007 highs, this is where this chart comes all the way back to. There are a lot of folks that are calling for the high on September 19th to be the ultimate high, that from this point forward, we've just entered an absolute bear market out there. Okay, and I'm not here to say whether that is the case or not. Let's just pay attention. Let's just go focus on stock patterns out here. And if we go take a look at the highs that were back here in July of 2007, as it made its first move down and then moved back up to a little bit higher high back in October, what you're going to see is that same natural harmonic, that same price distance, which is really odd the way that this works out here. When we take a look at that exact price distance, we saw those same two corrections back in 2007 before it made its high out here. So either the market's made a low, a significant low, a potential reversal kind of low out here, as it has along the way up since the March 2009 lows, or if this level here fails, if we see some more selling, and quite frankly, I don't have visibility as to what the market is doing out here. If we were to see, so the market could be cascading for all I know. I don't think that it is, but it could be cascading. Somebody in the market, in the den, can give me a thumbs up or thumbs down out here, because I need you as my co-pilots. At this stage, what I will say is, if Dow's up 102, thank you, RP. So if the market does cascade lower from here, what you'll also see on my chart is you'll see red lines. Now, this is a different kind of red line. These are steeper corrections that have existed. These are steeper corrections that existed. These are natural harmonics inside of the market out here. And that's why, we need to use a number of tools out here. And let's not get too caught up into the press, into the 200-day moving averages. Let's just take a look at natural harmonic patterns that exist out here. And if the market takes out yesterday's low, I don't mean by a buck or two, but really takes it out. What we're likely going to see is we're going to see a correction equal, just as we've seen before in the past in the S&P. This has taken us back into 2007, equal to that the red price harmonic line out there. And those red lines that you see on my chart, they are exactly the same. And we saw that kind of a correction that took place back in 2007, 2008, before there was a retracement up. We saw that as the market made its final blow down to the bottom in 2009. And back here during the flash crash era back in 2010, back to the August 2011 lows, I believe we saw that same kind of pattern out here. Maybe it wasn't even, maybe the flash crash was back here. Yeah, flash crash was back here. My apologies. So it was the 2009 lows that were led by the Greece, scare that was out there. And look, we've got a lot of scary things that are going on inside of the world. No question about it. Ebola. And using scare words out there, crisis, and let's face it, the market doesn't like scary words. You think we're coming into Halloween, right? The market gets spooked by scary words. In fact, as you know, there's algorithms that are out there that just simply focus on words, that trade based on word, bombs, terrorism. Things of that sort out there. So no question, has been a huge move down. But I want to just keep this thing in perspective for you. We have seen this pattern unfold before in the past. And we've seen this pattern unfold back at the highs in 2007, and we saw this same pattern go ahead and unfold along the way up off of March of 2009. So what we're experiencing here is really not anything different than what we have seen in the past out there. So that's I think that this is an important chart. You can go back and apply the same tool on your charting service, and you'll get a feel for where we're at. So now the real question is, what kind of bounce do we have in the market? It looks like, hey, that my system is back up and running. Thank you, Lord, for doing that. So now let's go take a look at some actual stock charts out here, and let's do that by, I was going to start taking a look at a couple things that were moving in the marketplace. So let's take a look at Priceline, PCLN. Priceline is up $15. What has Priceline done here? We don't want to look at the 30-minute chart. We're going to go take a look at the daily chart out here for Priceline. Priceline yesterday completed a 1-to-1 A to B equals CD to the downside. That A point was back here on March the 6th, 2014. The B point down here on May the 7th. This C point out here was on August the 11th. It makes an exact 1-to-1 A to B equals CD to the downside. No bullish reversal signal yet, but the day is not over. This is Steve Rhodes. This is TFNN. Thanks so much for hanging in there with me, folks. Great.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Dow's up 61 points right now, trading out at 16,382. S&P is up 8. Russell 2000 up 11. Now that I got my system working here, we were taking a look at the bonds. I noticed the continuous contract, and I've got the continuous contract back up on my screen here. But now I can switch over to the daily time frame out here. So the daily time frame shows that what bonds have now done also as well is they've completed a 1-to-1 A to B equals CD to the upside. The A point on this starting out here at the low on July 3rd, 2014. The B point came in on August the 28th, makes a retracement. Looks like a 0.786 retracement or so back on September the 19th. The 1-to-1 A to B equals CD to the upside, 143.09. Now, this has had a stronger move along this C to D leg out here. So unless we see some kind of reversal signal, what this says is that the move higher in bonds is not over out here. You ought to see it move up into about the 1.272 expansion of that A to B leg, which would take you up into the 145.15 area. However, because it has completed a 1-to-1 A to B equals CD, you want to keep an eye out and see what kind of candle forms out here. But at this stage, it does look like this should extend its gains higher until we see a bearish reversal signal, and that is on the 30-year Treasury. Let's take a look at a couple of these equities here that are moving to the downside here this morning. Let's go take a look at CF Holdings. That's down about only about down 1 7/10% off $4. Nonetheless, CF Holdings is pulling back into a little high volume-ish low that has not been tested. Looks like that is really its target area, August the 7th. Makes sense. Now, volume down there is 2 million shares. It's traded 123,000 shares so far today. So I would expect that low to be tested, not necessarily today, but the 240.67 level out here. Let's pull this back just a bit further. It should have pretty decent support at a price level here. We'll draw the line across the bottom of the screen. We're just looking for the sign of strength that has held, and that was the sign of strength inside CF Industries, and that was from February 19, 2014. There were 2.9 million shares to the upside out there. So it looks like that's where, oops, didn't mean to do that. Looks like that is where CF Holdings is likely headed to, probably about the 236.38 type range out there. Right now trading out at 247. If we take a look at Regenerate Pharmaceuticals, that's off about $4, down 1 3/10% out here. Let's go see what that is trading into. I don't mean to pull that back much further. Let's take a look at its retracement so far, off of the low from June 27 to a high that was put in out here on September the 2nd. It's below the 0.382 retracement. That says, hey, this ought to move down into the $307 area. It's 0.618 retracement. And really right in that range is where we've got its last sign of strength out here. We put that blue line across the bottom of my screen. So it looks like Regenerate Pharmaceuticals ought to try to find support somewhere between 307.63 and 315. Volume so far 119,000 shares. Not too bad as it pulls back into that sign of strength that has 2.3 million shares out there. What else we want to take a look at? So at this stage, Dow's off 39, so the bears, the sellers are back. We'll see if they are able to take control or whether the bulls mean business this time around. So when we go into the next show, we'll go take a look at the Qs. We'll look at the diamonds. We'll look at the spies. We'll look at the IWM specifically out there because that is putting up the biggest fight in the market. Gold is up $5 and change. The gold stocks, we'll take a look at those as well. So, folks, it is terrific Tuesday. Thanks so much for joining me and putting up with those problems that I had with my system, but all seems to be back to normal. Have a terrific Tuesday if you're starting your day, and I look forward to seeing you bright and early tomorrow morning. Take care, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.